Hi traders and welcome to the Technical Analysis Market Watch on Friday the 6th of September. So we saw quite an aggressive start to the week with some big moves on the indices and the currencies, but it has been relatively quiet leading into the non-farm payrolls tonight. So we'll jump into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and we can see, look, we had a pretty solid start to the week where we really pushed down from these highs at around that sort of 68-cent mark. We can see quite a bit of heavy selling early in the week, all the way down to the 20 moving average and pushed down further past the 60, pretty much the 67-cent mark. So look, it bounced off there. That was a very, very heavy level of support. As you can see right through here, we had weeks of support and resistance being touched through that point. And so no real surprise to see it bounce off that level. It's sitting above the 20 moving average now. Look, so for any strength, in order for this to move up at all, it needed to find support at this level and also get above the 20 moving average, which it has done now. So it's going to be an interesting time for it in terms of where it holds up. If we continue to trade above the 20 moving average and push past that 67.50 mark, which is around this high here, then we could look at aiming for the previous high at around that 68-cent mark. But if we do fail at this point and it turns around and gets a close below the 20 moving average, I'd be starting to target that 66.80 in the first instance. Probably that's a very solid zone in itself. Again, touching all of this resistance that we can see here that was lasting for many weeks. So really a pretty straightforward trade on the Aussie. If we're closing above the 67.5, we can start aiming for that 50 pips higher. And if we get a daily close below the 20 moving average, then we're going to look for that 66.80 as a target. But good trading on the Aussie. Hopefully you're able to catch some of this because it was a pretty easy trade. Even on the smaller time frames, you could see the lower high, lower low sequences playing out quite nicely from this high, which we knew was obviously a very strong level of resistance. So hopefully you're able to capture some of that. All right, US dollar CAD, same deal. It found support where it needed to find support. Obviously, around this level here, you can see we've got very heavy support. The start of the week saw us, move up really, subdued, and then a big move on Tuesday. Obviously, we had market closed on Monday. That didn't help matters, but what we can see now is it didn't quite reach the 20 moving average, but in reality, I think that the very strong resistance for this now is around that 136. So until it actually gets there, I'm pretty comfortable looking at long opportunities. It's sold off a little bit there, but I think that was probably more to do with the dollar weakness. We'll touch on that in a second. But I would be looking for a pretty easy trade here in terms of where it's going to go. If we get a daily close below that 134.80 area, which is around this level here, then all we're doing really is pushing down to around that previous low at around that 134.40. A break of that is obviously a little bit more dire, and then we're going to start looking around that 132.20. It's a big drop from there. So this is the last level of support. You can, if the trades are moving down in a timely fashion, lower high, lower low sequences on a smaller time frame, like a 1 hour or a 15-minute, you can start aiming for that 134 sort of 50-40 area around here. But if we start to see strength and we see higher high and higher lows instead, especially on a 15-minute or a 1 hour, I would be looking at the overhead resistance at around that 136 as the target for this one. It's pretty much, not far off the center of the zone really. So two very clear-cut zones, 134.50 here and 136. So really a 136 flat. So all we're looking for is scalping moves inside that channel. But just remember, non-farm payrolls does affect currencies a lot, and that is in this evening's session. So just be mindful of that. US dollar yen continued the sell-off that we basically expected. It was a do or die at this level. We talked about that last week, that if it did pull back up to the 20 moving average, it is definitely a roll reversal zone around that 146.50, and roll reversal it did. It hit the 20 moving average and turned right around. Look, again, it's one of those ones where you go to a smaller time frame and you're going to see trading opportunities everywhere. You can see here, if you go look at the that resistance, which is the 146.50 area here on the daily. Once it broke down from there, you can see it tested the 20 moving average all the way down. These are the things that I talk about all the time. Okay. Lower high, lower low sequences all the way down, hitting the 20 moving average, And yeah, no real surprise to see it where it is. It's on the brink of, you know, breaking down to a new low. And if it does that, look, it's very, very close now. It's trying to close down lower. Really, in my mind, like I've been saying for quite some time, the 141, 20 to 30 area is probably the target for this one. It's trying to do that. You can see the lower high, lower lows have continued, and it found resistance where it needed to find resistance at the 20 moving average. So yeah, good trading on the yen. Hopefully you're able to capture some of that move, because it was pretty easy trading on the smaller time frames. I wouldn't be looking at longs on this at all until it actually either turned around on a daily and gave us a high, 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 low sequence, or it found support somewhere around that sort of 141, 30 to 40 area where, you know, potentially that could give us a little bit of a long. All right, we'll move on now to the dollar index. So, look, it did all the things we needed to do as well. I mean, the technicals have been playing out very, very nicely over the last few weeks. And if you've been able to follow the levels, you should have got some really good trades in. Obviously, early in the week, it hit the high at around that sort of 101.90 area, hit the 20 moving average and that resistance zone. So perfect trading, really. That'd be a 38.2 fib as well of that move. So very, very heavy resistance at that point there, and it did what it needed to do. Of course, the euro is the one we'd be trading. We'll look at that in a second, but yeah, it found the resistance where it needed to, and that was your target to get into the euro. Not much to go on here now that it's in the middle of this channel. It's either, yeah, if it starts to trend lower, the obvious target's back down to the previous low, and if it turns around, I'd be taking first parts of profit around that sort of 102 level. But the euro is the one we want to be trading, of course, and it did all the right things. It came down, hit the 20 moving average, and again, you know, it found support off that level. So doing the inverse, of course, of what the dollar index is doing. It's an interesting one here now, because it's either it's either going to get to the previous high at around that sort of 112 area. If we get a sequence of higher highs and higher lows on the smaller time frames, say if you go to an hour, you're already getting a sequence of the higher high, higher lows. We want probably one more to break through. So if we come back down, touch the 20 moving average, and then push up to a new high at around that sort of 111.20, I'd be more inclined to start looking at long opportunities up to the 112. You can see that it's bottomed out and it's starting to wanting to reverse. So pretty straightforward on that time frame. The easy target is obviously the previous high at 112. Okay, so that would be the target that I'd be looking for. If it all turns around and we see a sequence of lower highs and lower lows instead, then what we're looking for, of course, is a move back down to around 110.40. Just below the 20 moving average here. The 20 moving average could prove to be a little bit of a stumbling block for it, but because it's already broken through twice on two candles, there's an opportunity there to actually probably get to the lows, and 110.40 makes the most amount of sense. The euro does get impacted by non-farms again, so just be really mindful of that when you're looking at your trading opportunities with that impending result. And the S&P 500, very, very weak. We didn't have any trading on Monday, so it was very flat, but it was looking a little bit toppy at this point here, so no real surprise to see it sell off. And the last 2 days haven't really filled us with inspiration that it's going to go long anytime soon. It's obviously in a bit of a holding pattern until tonight. Here is a little bit of a point of support. You can see there's like a few highs here. Not a great deal, but there is enough there to maybe pause it up for the next 12 to 14 hours. But in reality, though, it's pretty straightforward. If we're trading above the 20 moving average and above the 55.50 on Monday, I'd be looking for longs back up to around that sort of 56.50. But if we're trading below 54.50, which is an extraordinarily strong key zone, then I'd be looking for weakness early in the week and probably back down 100 points down to around that 53.30. I think we're ready to probably have a decent move. I think we're well and truly in September now, and yeah, the pending potential weakness could kick in. So it's certainly one to watch out for. I wouldn't be trading this before non-farm payroll results. I probably wouldn't be trading this before Monday, to be honest. But if it's trading above 55.50, look for opportunities to go long 100 points. And pretty straightforward, if it's trading under the 54.50, I'd be looking for 100 points on the way down. So very straightforward on the S&P 500, but just be mindful again, it is non-farm payroll. Trade with caution over the next 12 to 14 hours because they can really move markets, and the market looks like it's setting itself up to wait for that result and probably push in one direction or another. Both of them are valid trades, but being in September and looking for a bit more September weakness, my preference probably would be to the short. All right, so I hope everyone's had a great week's trading. We had some really good opportunities. Hopefully you were able to catch some of those. Have a fantastic weekend, and I look forward to seeing you all next week.